Today, we have Laurie Kuzenski, and thank you for coming today. Laurie is an entrepreneur, angel investor, mentor, and advisor to startups, and a partner at Kuzneski Insurance Group, an employee benefits, insurance, and human resources consulting firm. Laurie has a background in marketing and has also managed all facets of her own business, Miss Laurie's Gourmet Kitchen, as well as having a role in running most facets at Kuzneski Insurance, including HR, operations, finance, and business development. As an angel investor for over 20 years, Laurie and her husband, Andy, have invested in over 40 deals and are members of multiple angel groups across the country, including Life Science Angels, the Rising Tide Fund, the Femtech Fund, and the Next Act Fund in Pittsburgh. Laurie has extensive board of directors experience in both nonprofits and for-profit organizations, and currently sits on the board of directors for the Indiana Regional Medical Center, is a member of the board of trustees of the Indiana University of Pennsylvania, and is on the executive board of the Indiana County Chamber of Commerce. Laurie lives in Indiana, PA with her husband, Andy, and 3 children. Laurie, I'll let you get started. Thank you.
Great, thank you. I'm excited to be here. So that was a little bit about me. I can tell you a little bit about Kuzneski Insurance Group. Our business is about 54 years old, and we still consider ourselves a startup. My husband and I took the business over from my husband's family 7 years ago, and we have reinvented every part of our business, from turning over almost all of our staff except for one person, partnerships, how we do things, processes, all of that. So we have been in a continuous state of, I guess you could call it, chaos and growth and reinventing what we're doing for the past 7 years. And so we are excited about what we're doing, but we're also we share that experience with startups because you guys are doing a lot of the same things. So it really helps us to understand what you're doing. I wanted to share some information with you all today on insurance for startups. At our firm, we do everything from your basic insurance that you would need, the commercial insurance, as well as employee benefits. And so that's everything from health insurance, dental, vision, things like that for your employees. And so I'm going to give you the basics, because a lot of times what we run into when working with startups is that the people running, the founders of these startups, have never bought insurance before. Sometimes they're still on their parents' plans, all of that. So we like to give you sort of an overview of what it is, why you need it, and when you need it, because when you start out in a business, you might not have the money to buy everything up front, and you probably don't need it all up front. So we try and walk you through the life cycle of a startup and when you might need these things. So we'll get started, and please, if you have questions, unmute and ask me questions at any time. I'm so much better when I can interact with an audience, so Zoom calls are a little uncomfortable for me, and feel free to unmute and laugh at my jokes, because that's really what I'm looking for. So we're going to get started here, and like I said, feel free to jump in. Insurance basics. So, the definition on Wikipedia is insurance is a means of protection from financial loss. It's a form of risk management primarily used to hedge against the risk of a contingent or uncertain loss. Basically, insurance is something that you buy to make sure that your business is covered in all facets. So one time when I was 23 and I was dating my husband, and he was already in the insurance business, it was my birthday, and he bought me a dozen roses and a term life insurance policy. And I remember thinking, I wish that term life policy was on those roses, because when they were dead in a week, then I would really get a gift of the $100,000 or whatever the policy was worth. It is to protect your assets, your business, your product, your people. And so as you're, building your company, you want to make sure that it is protected on all sides. So you want to make sure you have good legal IP protection, contracts, things like that. Same thing on the insurance side. You want to make sure that you're covering your assets, so to speak. And then how do you get insurance? So this is what's really important. And we focus a lot on this, making sure that you have the right partner. So when you are, if you need to have a contract for your business or you need an IP protected, you're going to try and find the right IP attorney, somebody who really understands what you're doing and can help you make sure that you filed the right patent protection and all of that. Insurance is sort of the same thing. It's depending on what you're doing, it's not as easy as going online and getting a policy. You really need somebody who understands what it is that you're doing and can take what you're doing and sell that concept to an underwriter at an insurance company. So these are the people who sit there and look at what you're doing and say, this is a good risk, this is a bad risk, this is something we would cover, or this is something we wouldn't cover. And so we really have to spend a lot of time educating those underwriters about what some of our clients are doing. And so you want somebody who has some expertise in your field or an understanding of it, because we see a lot of clients that come to us that their broker didn't understand what they did and therefore their coverage didn't cover what they did. So we end up with a medical device company that the broker didn't understand, but they wrote it as a clothing manufacturer because it was made out of cloth. And so, a t-shirt wardrobe malfunction is different than a medical device malfunctioning. And the policy would not cover anything other than a clothing manufacturer. And so these people have been paying for coverage, but didn't have coverage. So it's really important that the person that you're working with understands what you do. You also want to pick one broker. It's not, it's sort of like attorneys. You wouldn't go out to an attorney or, to a bunch of attorneys and say, hey, write up my, my corporation documents and I'm going to pick which one I like the best after you do it. You would go and you would find the attorney and that would be right for that work and you would use them. It's the same thing here. If you have multiple brokers, the pricing is the pricing in a lot of cases, so that it really doesn't help you to sort of, what do they say, spray and pray, and send it out to a whole bunch of different people because they're going to block each other out of the markets. Sometimes a broker might not have the right market for you and what you're trying to do, and so you might have to work with somebody else, but it's really about finding the right person to work with and letting them go to work on your behalf. It shouldn't cost any more to work with somebody. Usually, it's baked into the pricing of the policies. Some firms do charge fees to do work for you. Our firm does not. But you want to pick somebody that's the right fit. And we do the same thing on our end. When we're looking at people to work with, we try to decide if they're going to be a good partner for us. So we don't work with everybody that comes our way. We're kind of picky about it, and we want to make sure that we're working with partners, not people that just view us as a vendor, people that we can help, people that we can give advice to and help consult, in some cases roll up our sleeves and help move them along. So, you want to make sure you've got a good fit, a good working relationship when you choose somebody to work with. And so once you pick that person and they help you figure out what it is that you need, then they go to an insurance carrier or an insurance company, and they work with an underwriter to get your policies written. Um, and so that's how it goes. And then, you get billed directly from the insurance companies, and then, that broker can act as a support to you, an advisor to you on your risk management, those sorts of things. So it's, picking that right person is important. Why do you need insurance? One, it is, it's I like a sleep at night policy. It helps you sleep at night knowing that you're covered. But a lot of cases, it's required that you have insurance, and so maybe the state requires it or clients require it. But in a lot of cases, it is you're building something and you want to make sure that you don't lose it if there's a problem. So some people, will choose to get quotes on insurance and weigh the risk out of what they're doing. We've had companies that just had a couple of interns that were working from home during the pandemic on their computers, and should they have insurance? Sure, they should have insurance, but they weighed the cost versus the risk, and they decided, you know what, I'm not going to get it at this point in time. And that's okay. You have to make that decision. But when it is something that's required, then you have to have it. So we've had clients that needed insurance, didn't get it, and sold product, and then couldn't get paid until they had insurance in place. So, you have to weigh the risks, and you have to weigh the requirements of, people you're working with on whether or not you decide to get insurance. And what does it cost? This is always a question that people need to know. And a lot of times, as you're building your pitch decks and things like that, and you're building your financial models, you have to consider, what does insurance cost? And it all depends. It depends on the type of risk you are. Are you, building something that is going to go into somebody's body and could potentially kill them? That's a little different risk than, an app that my mom plays on her iPad. So, we look at the risk. They look at the financial stability of the company. They look at, history of things, any other, if you've had claims in the past, things like that. So all of those factors go into what it costs. And then what kind of limits do you need? So you might have requirements where they expect, $1 million of coverage or $2 million of coverage. And so based on that, that's everything that will go into deciding what it costs for insurance. So let's take a look at the startup life cycle. Now, I had my intern put this PowerPoint together, and I always say I do these like a boss, but I wish I could do them like an intern because they're so much better. But if you look at this startup life cycle, it's very evenly spaced. It looks nice. It's like you go from one thing, you finish it, you do the next thing. Most of the time, this life cycle can be like stacked on top of each other, smashed together. It's never this clean and easy for startups. So, we talk about these different areas and where and what you might need at these different stages. So you're just getting started, maybe you have an idea, that sort of thing. It's a great time to figure out what you might need moving forward. You're building your product, you're taking on investors, you're trying to attract top talent, and then, hopefully exiting. So these are sort of the different stages of the startup life cycle. So we're going to break these down a little bit and talk about what needs to happen at each stage. So you're just getting started. First question you need to ask yourself is this business idea even insurable, because we've had a number of people who've come to us with, they had the whole business planned out. They had their business cards, they had letterhead, they had the website ready to go. And, I remember saying, I don't know that you're going to be able to insure that. And they had gotten some advice that, oh yeah, it's real easy to get, gig insurance or something like that. And we took it everywhere we could possibly go to, the Lloyd's of London and surplus lines, all of that, to find somebody who could insure this, and no one would insure it. And that's a problem. You can't risk running that business if you can't get the insurance for it. And so we've had a few that were like that. And if you have a ton of money and you can self-insure it, then you can decide to take that risk. But these were companies that were starting up. They were companies that were looking for funding, and they were not going to be able to pay for insurance to cover this. Or if there was insurance, sometimes it is so expensive that you can't run a business and make enough money just to cover the cost of the insurance. So if you have an idea, it can be helpful to ask that question of somebody who understands the industry. Hey, do you think there would be any issue getting insurance for this? So that's always important. Who says that you need insurance? So when you get a landlord, if you are working in your dorm room or your apartment, or your parents' garage, and you're ready to go into a space, whether it's at the university into a lab, or you're renting space someplace, your landlord is going to require you to have insurance. So if you burn the place down, if somebody gets hurt on the property that's doing business with you, all of that, they're going to expect you to have insurance. Your university, if you're spinning tech out of a university or IP out of a university, they have requirements, because they don't want to get sued if you do something with that technology that comes back on the university. So universities have standard requirements that they ask you to have coverage for. We have spent some time pushing back on some of those, depending on the product or the stage of the company, where it's, the company can't possibly even get off the ground if they have the extreme limits that are being asked for. So we sometimes can get those ratcheted back a little bit so that the company can start, and then as they hit milestones, we up the coverage. But the universities are definitely going to have something to say if you're spinning out of a college. Your clients are going to require you to have insurance. So as I mentioned before, the people who sold something to their client and they wouldn't pay them until they had proof of insurance. Depending on what you do, they're going to have specific requirements for you to have insurance. So whether it's for your product liability or just general liability, they want to know that you have coverage. The state will require you have coverage. So if you have employees, the state requires you to have workers' compensation insurance. So, the state can do that. Your employees are going to want you to have coverage. So things that protect them, they're going to want you to have benefits. They're going to want you, to make sure that the company is protected and that they're protected within the company. And then your investors, if your investors are worth their salt, they're going to want you to have certain coverage. And we'll talk a little bit more about the kind of coverage that they're going to expect you to have. But, most good investors are going to look at a company and not just the product, not just the entrepreneur or the team. They're going to want to make sure that you've got a solid foundation around your business that is really going to make it so that you can run the company safely, and you're protecting their investment now as well as your own investment. Um, the coverages that you typically need to have are going to be general and product liability. So general liability is if if somebody comes to your offices and they slip and fall on the ice out front, that's going to protect the other person. So if somebody else, is harmed by your place of business or whatever, it's going to cover that. Product liability is going to be, your product. It's going to cover liability on your product. Workers' comp is going to cover your employees. So this is a protection that came out to protect the employees if they get injured on the job. An umbrella policy is something that, if you have to have higher limits than what the general liability policy or the product's liability policy will cover, then you buy an umbrella and it covers that and gives you greater coverage. Like I said, employee benefits. So this is your medical, dental, vision insurance, things like that. Cybersecurity is super important right now. If you do anything with data, it's not a question of if you get hacked, it's when you get hacked. And so cybersecurity insurance is really important. And then auto insurance, business auto. So if you have employees that are driving their own vehicles to a meeting and they get into an accident and they hurt somebody, when that attorney finds out that your employee was going on a work meeting, they're going to come after the company. So it protects you, the company, and the employee. So those are some things that coverages that we typically see people needing, in the short term. So that's when you get started and you're building your product now. And product liability describes responsibility that a manufacturer, distributor, or seller may have if a buyer becomes injured by a defective product. So it's not just the person selling it. So I have a product and I'm selling it at Target. Target is responsible. The manufacturer is responsible. As the person who created the product, I am responsible. So it can go the whole way back. And so you want to make sure that you have good product liability coverage. Another one is you're building that is tech E&O. So if you have, say you're creating a software that, if it malfunctions, can cause harm to the company that's using it or the person that's using it, then that's an errors and omissions product. And that would cover you in that standpoint. So like Hershey's one year had a new software that they were using for to control inventory, and it malfunctioned. And so Easter came, and based on the technology that they were using, they had enough chocolate, when in theory in truth they did not have enough chocolate. And so the Easter season came and went, which is their biggest season, and they did not have enough chocolate to produce what they needed to. And so they lost a whole bunch of revenue, and that caused a tech E&O claim for the company who created the software that malfunctioned. Something you need to consider is when you have a product, consider the risk of that product. So we've had clients who, went online and got a $250 liability policy because they were a software company. And when their policy was renewing and the underwriter called them to get some more information, they found out that the software they were creating was, like I said, not an app that my mom would play on her iPad, but an software that would run an autonomous vehicle. That's a little bit bigger risk than, my mom's Scrabble app. So, immediately the insurance company canceled them because that's not what they were insuring. And then we had to get involved, and we started helping them find something, and it was considerably more expensive than $250. So if you think about the risk that your product could have, so if you're putting it in someone's body, if it's monitoring, something that if it malfunctions, they could die, that's going to be a greater risk, therefore a greater cost. So as you're looking at insurance and trying to understand, it's a good A/B test to decide, okay, here's my risk. This seems awfully inexpensive for that kind of a risk. I might not have the right coverage. So you just want to make sure that, if you think about what it is you're doing and what kind of damage it could cause if it did not work, if it malfunctioned, how much could it hurt somebody, and what would that be worth in court. You want to make sure that your insurance coverage is covering that risk. So just something to think about is if you have a product that you're considering and all of that, especially when you're building, your financial models, you want to make sure that you have the insurance costs in there. Investors. So, you come to this stage, you've got your product and you're taking on investors. You want to make sure, and this is what they should require. So they're going to require that you have all the other things that we've already talked about. They're going to make sure that you are protecting the company, which is the asset that they are investing in. But what they should also cover is directors and officers insurance, and in some cases, key person life insurance. So let's talk about D&O insurance first. So this covers the directors of the board of directors. So if they, invest and they become, they sit on your board to help advise you. This covers them if there's an issue. It also covers the officers of the organization. So the founders, C-level folks in the organization. And the reason why this is important, if you have an investor who's unhappy with the way things went, so say your company sells and they didn't think you, got the return you should have gotten, they can sue you. And this policy is going to respond to that and cover the legal costs should that happen. The Me Too movement has caused a lot of directors and officers policies to respond to lawsuits, and also has caused directors and officers insurance to become very expensive right now. So as they're sort of correcting for all of those cases. My husband was on the board of a publicly held bank, and they sold the bank. And one morning he woke me up and handed me an iPad with the news report about the bank being sold. And I was mad because he didn't tell me that they were selling the bank, because he couldn't. He had to keep it secret until it happened. But then immediately afterwards, another article popped up, and it was listing the board of directors of that bank, which my husband was one of, and that they were being sued. And I was like, what is this? And it really caused a little bit of panic because, what are we going to have to do to protect ourselves from this lawsuit? And apparently there are law firms out there that as soon as a bank or some entity sells, they immediately file a lawsuit on behalf of the investors just to see if there's anything that they can drum up from that. So nobody had done anything wrong, but it still caused a little bit of panic for a minute. But immediately the directors and officers insurance is going to respond to that and cover those folks in your organization. So a lot of board members, I don't sit on a nonprofit board unless I know they have directors and officers insurance. It covers if there's a sort of a fiduciary issue that happens, the board is covered. Um, there isn't coverage if it's, a board member suing another board member. That doesn't respond then. But if an outside party, an employee, another investor were to sue the company, that's when a directors and officers policy is going to come into play. Key person life insurance is really important, especially if you have a founder who, you think the mad scientist who's the only person in the world that knows how to do whatever it is they do. If that person dies, what happens to the company? And so a lot of times we'll see investors look at the founders and say, this company is what it is because of those people. We want to insure them. So you buy a life insurance policy on those people, and then if they would die, that money is then used to either dissolve the company or to save the company and keep it afloat until they can get somebody else in who can do what the founders were doing. So, that is a really important one. If you, have we have certain employees in our office that are key to our business. And if something happened to them, it would cause a great disruption in our business. And so we have insurance policies on them. So it's, one of those things that a lot of people don't think about. This is not your personal life insurance or anything like that. It's if, somebody within the company that is key to the success of that company, if they were to die, this would help keep the company afloat until they could bring in the right people to keep things moving. Does anybody have any questions so far? No? All right. Attracting top talent. So this is when you need to start hiring people. So, we see, depending on the industry that you're in, in robotics and AI and all that kind of stuff, we see a lot of competition for those types of people. And even if you're trying to hire somebody who, has been in the industry for 20 years, and you want to take them away from, a well-established company and bring them into your startup. How do you do that? And maybe you can't afford to pay them everything that they were getting paid at their other company because you're a startup. And so sometimes what you need to win those battles for top talent is really good employee benefits. And so your employees are going to, want you to have employee benefits. So health insurance, dental, vision, life and disability insurance. Those are all, group products that you can buy. Then there's voluntary benefits that you can get. So this could be anything from ID theft insurance, pet insurance, things that you can offer to your employees that they pay for. So it's not always a cost to the company, but it's still a nice thing that you can offer people, and they're getting them at group rates, and it's cheaper for them to buy them. And we see things like people who are paying for college loans and things like that. So there's a lot of different types of benefits outside of just the normal employee benefits that we think of from an insurance perspective. There are other things out there that we can help you identify and set up. So, whether it's a health savings account or something like that, there's a whole bunch of different ways that you can do that. And, so some people are still in their parents' plan till they're 26, and they want to hire somebody who is older and they need benefits. We can help walk you through how all of that works and make sure that you're getting the best products for the price, so that you aren't breaking the bank. And, I've worked with a lot of startups who, they want to offer the world to their people. And because that's sort of the culture that they have in their organization. And I always love that. But at the same time, it's like, okay, that's great, but you're going to break the bank. And so we need to start here. And then as you grow, you can start adding these other benefits on. And some people will look at the opportunity to work with your company and what you have now. And then if you have this roadmap to, hey, when we hit this milestone or we hit this milestone, we'll be adding these things, people will then take a chance on your company, knowing that these things are potentially coming down the pike. So those are the things that employees look for when they're going to work for a company. Coverage you want as an owner or a founder of a company, you want workers' compensation insurance. This covers if an employee gets hurt on the job. This will cover their medical benefits and their lost wages. So you want to make sure that you have that in place. That's a state requirement. And also, if you don't have that, there's big fines that you'll have to pay if you get caught not having it. So as soon as you have payroll, you have to have workers' comp insurance. And even if you're paying 1099 people or contract workers, if they don't have workers' comp insurance, you need to have workers' comp insurance for them. So that's something that's really important. You want to make sure you have employment practices liability insurance, so EPLI insurance. This covers you if an employee were to sue you. So even though Pennsylvania is an at-will state, you can fire anybody for any reason. They can also sue you for just about any reason, and you have to respond to that, whether they are justified or not. The EPLI insurance is going to cover the costs of the attorneys and that investigation and all of that for the cost of your deductible. So that is a really important one to have. And what we're seeing now with COVID and certain employers saying, I want my employees to come to work, and other employers saying you can work from home. You see a lot of employees who are not happy with how maybe their employer is handling this. So EPLI insurance is one that's probably going to get used a lot over the next year or so as people lose their jobs or people say, I'm not coming to work because I am worried about getting sick. It could potentially be an important benefit to have at this point in time, and something that we recommend to all of our clients that they have if they have employees. And then something else that is really important, and it's not insurance, but it's having consistent policies and procedures. So when you have employees or when you have a company, you want to make sure that you are doing things consistently. Where we see our clients get into problems is when they have a person who's trying to be nice to somebody else who's having an issue. And so maybe they make a concession for that person, and 9 times out of 10, it causes a bigger issue than just that little problem that they were having. So you want to make sure that you have a good employee handbook, that you do things the same way for everybody. You can't say, well, this person, I'm going to do it this way for them, but then I'm going to do it this way for this person. If you do it for one, you do it for all. And so making sure that you have consistent communication, you have a good handbook, you have consistent policies and procedures for how you do things, that protects you. It keeps you from having to use your insurance, is probably the best way to put it. So you want to make sure that if that's not your forte, if thinking those things through and making those determinations isn't your cup of tea, get somebody who understands that and can say, this is how we do it, and this is how we do it. And so this is how you're going to do it, like it or lump it. This is what needs to happen. And so I just think that is something that is super important to keep you from having to use your insurance policies. And insurance is something we buy and hope and pray we never have to use. And so, that's one of those things that you can do to help make sure that you don't need to use this type of insurance. So you exit. And so this could be, you get bought by somebody, or, if your company has to shut down, what happens to your insurance? We have a client that got bought by somebody else, and they're shutting down a whole department. And then another client who has a spouse of one of those people that is working there, and called us and said, I don't know what to do about our insurance because my wife is going to lose her benefits because they got bought. And typically that's not how it works. So if you get bought by somebody else, or you buy somebody else and merge them in, sometimes we see clients continue their coverage as is. So we've had companies locally who've gotten bought by somebody in Europe, and because the insurance is so different, they keep the local insurance, and we maintain that while the other company is insured across the pond. And so sometimes that can happen. Sometimes it gets merged in. And you take the best of these benefits and these benefits. We had a Pittsburgh company that got bought by a company out in California, and the benefits here in Pennsylvania were so much cheaper than they are out there that it was worth it for the HR person to deal with two plans instead of merging them into one. So, sometimes it'll continue as is. Other times you might merge things together, but it's really important when that happens that you make sure that you don't miss any coverages, that something doesn't get lost in the transition. And you also want to make sure that that if you are merging into another company, and if a company is buying you, they're going to make sure that you don't have any outstanding issues or claims. We had an investment one time that was about to be bought, and they found out there was a sexual harassment claim out there, and that caused a problem. So you want to make sure that if you're buying someone or they're buying you, that you've got sort of a clean slate there. And if you don't, that you share that information so that the insurance companies and the companies that are merging can understand the full picture. Also, if your company gets bought and you're not staying with that company, you need to think about what insurance you need to replace for yourself personally. So a lot of times, if you had life insurance or disability insurance, or your health insurance, and you're leaving that company, some things you can port with you. Other things you have to replace them. And so you want to make sure as you're going through all of the other rigmarole of merging or selling or exiting, that you take care of those personal things as well. And then the last thing is tail coverage. So if you are shutting down, and this is big in directors and officers and even EPLI insurance, if you sell the company, you want to buy tail coverage that's going to extend that policy, even though the business is no longer in business, in case something comes up after the fact. So somebody might decide, a year later to file a claim against your company, and that's where tail coverage is going to protect you that way. So it is another thing to consider when your company is exiting and all of that. Let's see. So That's everything I have. Do you guys have any questions? Anybody have a business idea that they're working on and want to get an idea of, if it's insurable, that sort of thing?
Hi, Laurie. I had a question.
Okay.
I think I put it up in the chat. My question is that I've heard that a lot of accounting firms have malpractice insurance
Uh-huh.
because they deal with acquisitions and they do, in case they miss something fishy in the financial statements.
Yes.
How important do you think malpractice insurance are for startups?
Well, it depends on what you're doing. So there's professional E&O insurance or liability insurance, which depending on what you're doing, and sometimes if we see software companies, that are maybe taking on the data and whatever it is their software does, it provides guidance to a company, and even personally, as if you're a consultant or something like that, it's good to have professional insurance, which is errors and omissions. So if you screw up, give bad advice, get sued, you've got coverage for that. So I think it can be very important, especially when you're first starting out, and then as you grow, obviously, but to have it from the beginning is really important. I remember when I started my business, Miss Laurie's Gourmet Kitchen, and I was a stay-at-home mom. I left banking and wanted to start this little, I thought it'd be a little cute hobby business. And I was making a family recipe for peanut brittle at Christmas time, and it ended up being this big thing where I was, making 6,000 pounds of brittle every year and shipping it all over the world. And so I called, the health department, and they came and inspected my home kitchen. They, I had insurance, I incorporated, and everybody along the way was like, why are you doing this? Nobody's going to pay attention to you. And it's like, because I want to be a real business. I want to make sure that I am dotting my I's and crossing my T's. And that was really important to me. And I think if you want people to take you seriously and know that you're legit, this is what, especially when you're a startup, until you build that credibility, having that coverage and letting people know, listen, this is what we have backing us up. I think it goes a long way to helping startups, prove themselves a little bit more before they get a track record.
And was that a decision you made after taking some legal counsel, or did you just decide to get insurance by yourself?
I considered doing that from the very beginning, just on my own, and and talked to, obviously, I'm married into the business, but it was one of those things that just for me, if somebody choked on it, if somebody bought it and they were allergic to peanuts, what could that do? And how do I protect our personal, finances and keep it separate, from the business? So, I had a lady that came to my house one time and picked up a big box of brittle, and she was leaving and she fell on my sidewalk, and I was like, oh, and it was horrible. My husband's like, we have insurance, it's okay. And I'm like, oh, okay, thank God, but it really does give you that, that confidence and say, okay, everything I've built is not going to go away because this lady tripped and fell on my front porch, and so I think it's one of those things. Any good attorney is going to tell you that you need to protect yourself, and whether it's legal documents, which only go so far, and then people can still sue you even if you have a legal document. So it's important to have that coverage to back you up.
Thank you for sharing that.
You're welcome. I don't know, Allison, are there other questions in the chat?
No, that was the only one.
Was that the only one? Okay. Does anybody else have questions?
Hey there, I actually have a question. It's a little specific and maybe not relevant to other people, so I apologize for that. But so I sell rare tropical plants, and they're quite expensive. And I'm concerned that the people who I'm sending them to, which are, you know, private, they're not businesses or anything, but I'm concerned that one day, let's say a little bug ended up on one of the plants that we're sending out, and then it gets on all of their plants. Is that something that is insurable in terms of protecting against somebody suing for not something they're ingesting, but something that is, you know, their personal collection? You know what I mean?
Your infestation.
Yes, it's my worst nightmare.
Yeah, sure. Well, you know, we all have, any business that you have, it's like, what's the one thing that keeps you up at night that you worry about, you know? And so, yeah, and so, you know, thinking that through. So I know, and that's when I would want to talk specifically to underwriters. But if there are, so, you know, we have companies that grow vegetables, farming, things like that. There's certain coverages for things that can happen. So if there is, you know, there needs to be a recall, if, you know, things like that, that we have to get special coverage for them. So that's what I need to do a little bit of research
It's
on.
very specific.
Yeah, that's kind of a fascinating one. And my family is, I don't have the green thumb, but my husband and daughters do, and we have plants galore, and they're always looking for new things. And I just pitched one because it had spider mites on it. And so,
Spider mites are the nightmare. Yes.
yeah, they were, and I was so worried that they were going to get on everything else. And I was wearing a cashmere sweater when I did it, and my husband took that sweater and put it in a bag someplace. I've not seen it since, because he was afraid I would bring spider mites into the house. So it's yeah. So that's an interesting one that. No, you know, and so part of what we do is we, you know, we get questions like this, and we see these companies that are doing something that's either never been done or that is so bleeding edge that people haven't heard of it yet, is to, you know, try and kind of pattern match it to other things that are out there, and how would it fit. So I would almost, you know, want to look in the farming coverages, and you know, in food coverages, things like that, for, you know, greens and all of those sorts of things, to see if it would apply to your situation. But,
gotcha. So even if it's very specific, that doesn't make it uninsurable necessarily, is what you're saying?
Correct.
Gotcha.
Yeah, sometimes it might just be that might just fall under a general liability thing, because it's plants, and how much could it cost, you know what I mean, and that sort of thing. And not that your plants, I mean, I have seen, you know, I bought my husband a lemon tree, I know what they can cost. And so it's you know, and I know how people feel about it. It's like pets and kids, you know, they're plants. So it's
yeah, absolutely. And
yeah,
you know,
you can
some
see
of the
people getting very
plants
upset over that.
Yeah, some of the people you send plants to have thousands and thousands of dollars of plants, and
yes,
yeah, so that would make me sleep at night. Thank you very much for answering that question.
Sure, no problem, no problem.
Laurie,
Anybody else? Go ahead.
Yeah, we are actually at a very initial stage in determining one of our ideas for a startup, which is at the intersection of healthcare and technology. And insurance companies are one of our stakeholders. So I was wondering, what do insurance companies look for if a startup is trying to improve the healthcare sector and help patients improve their livelihood and their health?
So, so you would be helping the healthcare company, or are you helping users of healthcare? So like if it was UPMC healthcare company, or the subscribers of UPMC, people who have UPMC health insurance?
We would directly be helping the users, but indirectly also helping the companies.
Sure. So we see a lot of people who are creating things that help, individuals be healthier, utilize, become better consumers of healthcare, because it's changed. It's not where you went to your doctor and the insurance company paid 100% of it and that was it. Now it's, we're trying to teach our clients and their employees how to be better consumers of healthcare. So depending on the healthcare company, so UPMC, a Highmark in Pittsburgh, United Healthcare, we're kind of fortunate in Pittsburgh to have two big regional carriers here that are kind of accessible, especially to people from CMU and Pitt who are creating things. But so they're looking for things that, one, there's a good ROI, that it's one that they can calculate. A lot of times we, as an insurance broker, we might take wellness programs out to our clients and they're like, yeah, that's great, but I can't quantify or justify that cost, because I can't, yeah, my people seem thinner and maybe healthier, maybe they aren't taking as many sick days, but it's, a lot of times they can't justify the ROI. So I think when you can really nail down the ROI on something, that will help get attention. But then a lot of it is networking to the right people and, getting some beta tests in and things like that. So, I mean, I've helped, people with healthcare initiatives meet with people at my hospital that I'm on the board of. We might help people get into, talk to people at UPMC, things like that. But, they're bombarded with ideas, but if you've got a good idea, I say go for it and use the network at CMU to get to to the right people in those healthcare companies. And, and I think that we've seen some pretty successful companies out there manage that. So that's, kind of what they're looking for. It's all about the ROI. And sometimes it might be about goodwill, if it's something that they can add to a product, or telemed is probably the newest thing that they've started offering. So before it was a standalone thing, and now UPMC has the UPMC Anywhere app, and Highmark has one, and so they're definitely looking for things, and there's definitely people who are looking for innovation at those companies. That's a whole department usually at the carriers. So
Great. And with respect to ROI, sometimes, I mean, we are at a point where we are not very clear on the revenue model as yet. So do you feel like having a lot of clarity on what is the profitability is very crucial for insurance companies?
I think it's going to be important, and in proof of concept. So making sure that what you say your product does actually does it. And, they're going to want to see users, they're going to want to see, efficacy, all of those sorts of things. So, the financials is a hurdle. And then, all of those other things, and making sure it's different enough from what other people are doing, or exciting enough that people are going to want to use it. There's a lot of inertia in healthcare. I mean, even, when you see people, who are willing to, well, I'm going to wait till I get a vaccine for something, but they're not doing anything to better their health on their own. It's easier to take a medication than it is to work out.
Right.
And so inertia is a huge thing that you have to overcome when it comes to healthcare and changing people's behavior and buying habits and all of that. So, just something to be thinking about.
Absolutely. Absolutely. That's a really major takeaway. Thank you, Laurie.
You're very welcome. These are great questions.
And do we have any other questions?
I will say that I am listed to do office hours at Project Olympus. But if anybody, has questions or wants to, talk about what you're working on, part of my job is, I always call it community outreach. And so all my nonprofit work that I do, I lump it under that, but then also mentoring startups and meeting with people who have ideas. I consider that a big part of my job. So if you have questions or you want to talk about anything, or if there's somebody you want to meet and I'm connected to them, I'm happy to make introductions. So my contact information is here. You can go to our website and schedule time with me if you want to. But I'm more than happy to, sit down and help you flesh out ideas or anything like that. That's probably my favorite part of my job. So always happy to help.
Okay, thank you, Laurie, for coming. And if there aren't any other questions, we are going to end the session for all.
All right.